Welcome to this presentation by Facilitators Research. This research is distributed exclusively for informational and educational purposes and does not constitute financial, legal, tax, or investment advice. For such services, you may reach out to speak to one of our officers.
Insurance brokers are the intermediaries that sit between insurance buyers and insurance carriers. They advise clients on their risk exposures, source appropriate coverage from carriers, negotiate terms and pricing, and provide ongoing claims support. In African markets where insurance penetration is low and product complexity is high, brokers play a particularly important role in educating clients and structuring appropriate coverage. This presentation examines the African insurance brokerage landscape, focusing on the multi-billion-dollar institutions that anchor it and the structural forces that will determine its trajectory over the coming decade. Total annual brokerage revenue across Africa exceeds $3.5 billion United States dollars, with brokers placing approximately $25 billion in gross written premium with carriers. Approximately 45% of commercial lines insurance in the major markets is placed through brokers, with the balance placed directly with carriers or through agents. More than 8,000 brokers are registered across the continent, with the majority based in South Africa, Nigeria, Kenya, and Egypt. The brokerage industry is highly fragmented, with the top 10 brokers capturing less than 30% of total revenue, leaving significant room for consolidation. The leading African insurance brokers are dominated by South African operations of Global Brokers. Aon South Africa, part of Aon plc, is the largest broker on the continent with significant operations in commercial and reinsurance brokerage. Marsh Africa, part of Marsh McLennan, is the second largest with strengths in corporate risk advisory. Alexander Forbes, listed on the JSE, combines employee benefits consulting with insurance brokerage. Price Forbes is a leading independent corporate and specialty broker. In Nigeria, Aon Insurance Brokers and Adeyemi and Eguikun anchor the local market. In Kenya, Mine Kenya and APA Insurance are significant players. The geographic concentration mirrors the broader financial sector. South Africa hosts the largest and most sophisticated insurance brokerage market on the continent. The industry benefits from a deep commercial insurance market, sophisticated regulatory framework under the Financial Sector Conduct Authority, and a long history of institutional risk management practice. Aon South Africa, Marsh Africa, Alexander Forbes and Price Forbes together capture the majority of large commercial and reinsurance brokerage revenue in the country. South African brokers have also extended their reach across southern Africa, with operations in Namibia, Botswana, Zimbabwe, and Mozambique. The South African brokerage market is also the most innovative, with early adoption of captive insurance structures, alternative risk transfer, and parametric weather covers. Insurance brokers provide 5 core services. Risk assessment. Brokers conduct comprehensive assessments for clients, identifying exposures to property, liability, business interruption, and specialty risks. Market placement. Brokers source quotes from multiple carriers, negotiate terms and pricing, and place coverage with the most appropriate insurer or syndicate. Claims advocacy. When claims arise, brokers advocate on behalf of clients to ensure prompt and fair settlement. Risk engineering. Larger brokers offer engineering services, helping clients reduce loss frequency and severity through operational improvements. Captive management. For large clients, brokers establish and manage captive insurance companies, allowing clients to self-insure specific layers of risk. Commercial and personal lines brokerage operate on different dynamics. Commercial lines brokerage is the dominant revenue stream, accounting for approximately 75% of total brokerage revenue. Clients include large corporates, state-owned enterprises, and mid-market companies. Brokerage commissions range from 10 to 20% of premium, with larger risks commanding lower percentages. Specialty lines like marine, aviation, and energy command premium commissions. Personal lines brokerage is a smaller but growing segment, accounting for approximately 25% of revenue. Brokers serve high-net-worth individuals with complex insurance needs, including fine art, jewelry, and luxury vehicle collections. The personal lines brokerage model is increasingly challenged by direct-to-consumer digital distribution, with growth coming from high-net-worth segments. Reinsurance brokerage is a specialized subsegment with significant African opportunity. Reinsurance brokers sit between primary insurers and reinsurers, placing treaty and facultative reinsurance covers, negotiating terms, and providing technical advisory services. Aon Reinsurance Solutions and Guy Carpenter are the two dominant global reinsurance brokers with significant African operations. The African reinsurance market is growing rapidly as primary insurers seek to manage their catastrophe exposures, climate risk, and large specialty risks. With African reinsurance premiums exceeding $10 billion annually, reinsurance brokerage revenue is approximately $300 to $400 million, making it one of the most attractive niches in African financial services. 5 risks and challenges face African insurance brokers. Cyclicality in premium rates. Premium rates cycle between soft and hard markets, with brokerage revenue following the same cycle, creating earnings volatility. Disintermediation by direct channels. Direct-to-consumer digital distribution in personal lines is gradually disintermediating brokers, particularly in motor and household insurance. Regulatory pressure on commissions. Regulators in several markets are scrutinizing broker compensation arrangements, with potential for fee disclosure mandates or commission caps. Talent retention. Brokers face significant competition for experienced brokers and technical specialists, particularly in reinsurance and specialty lines. And insurance cycle underwriting. Weak underwriting years in the primary market can pressure broker revenue as clients reduce coverage or shift to self-insurance. Insurtech is reshaping parts of the brokerage value chain. Digital brokers, also known as insurtech brokers, are using technology to streamline quote comparison, policy issuance, and claims handling for retail and small commercial clients. Companies like Yalu in South Africa, Lami in Kenya, and Verify in Nigeria represent the new wave of digital brokerage. While these companies have not yet captured significant market share, they are pressuring traditional brokers to invest in digital capabilities. The likely end state is a hybrid model where high-value commercial and specialty brokerage remains relationship-driven, while standard personal and small commercial lines migrate to digital channels. Brokers that fail to invest in digital risk, losing relevance with the next generation of clients. In summary, insurance brokerage revenue will grow at high single-digit rates as African insurance penetration rises from current low single digits. Consolidation will continue, with global brokers acquiring independent firms to build Pan-African platforms. Digital disruption will reshape personal and small commercial lines, while commercial and specialty brokerage will remain relationship-driven. And reinsurance brokerage will be the highest growth niche, driven by increasing catastrophe exposure and climate risk awareness. The insurance brokerage subsegment offers steady growth with attractive returns for firms that invest in digital capabilities and specialty expertise. Thank you for watching this examination of insurance brokers.